Well, on the east of the continent, Kenya, Tanzania, Uganda and Rwanda announced their 2010-2011 fiscal budgets today. Kenya, East Africa's biggest economy, is looking to increase its budget to nearly $13 billion next year. This to keep the growth momentum up. Terryan Chebet from Kenya compiled this report.
Kenya's government spending has been growing at a compounded annual growth rate of 20% per annum. This far outstrips the economic growth. This is just one of the several challenges Kenya's Finance Minister Uhuru Kenyatta faces as he prepares to table the budget.
Agriculture is the backbone of the economy of Kenya, and the farmers don't have roads to allow them to take their produce to the market. Okay? All this is having an impact. So within all this, we need schools, we need hospitals, we need power, we need all this. But to my mind, I think that probably is going to be, should be the major focus.
According to a recent report by audit firm Deloitte, one of the major challenges facing the largest economy in East Africa is infrastructure, and this is a building block for the economy.
Infrastructure development is going to be the key to developing the country, to making us grow faster. If we're going to be, if our Vision 2030 is going to be come through, then we really do need to invest in infrastructure. When I look at the economic survey, they're certainly over the next year earmarking major amounts in the transport sector, which is towards the road network. In fact, I think they're increasing the amount for development expenditure in the road network, the transport network, of up to 70%.
Other challenges include unemployment, as the informal sector still creates the most jobs in the country. Kenya's competitiveness has declined in relation to other countries in the region, and slow privatization, as recent privatizations have not been concluded as expected. Despite the hurdles, economic analysts say there are opportunities for growth that the Kenyan government should tap into by investing in infrastructure in line with Vision 2030, public sector reform, as well as engaging with emerging economies such as China.
I think PPP, public-private partnership, that is critical. The government shouldn't try to do everything on its own. They should involve private sector, bring in efficiencies in project management and implementation, and I think that is the way forward.
But what do ordinary Kenyans want to see in this year's budget?
Why I've said that we don't expect much from this particular budget is, one, essential commodities to the common man. There's no way they are going to be reduced.
We need funds that are going to improve our schools, funds that are going to improve our hospitals, that are going to improve our living standards.
I like also the ministers to provide a lot of funds to our constituencies, so that they will provide us to help and provide us to pay our university fee.
What about the experts? What don't they want to see in the next fiscal plan?
I don't want to see any increase in rates. That, I think, would be a totally retrograde backward step if we increased rates. So yeah, we really must go towards reducing rates and not increasing the rates.
Going forward, the integration of the East African community will necessitate member states to realign their budgets in line with coming together of the 5 states as a single trading bloc. Now, this has led business leaders to raise concerns about double tax treaties, harmonization of domestic taxes, as well as VAT. But until the 10th of June, East Africans will wait to know how their money is being spent.
Well, it's certainly a big day in the East African region. Today in Kenya, the budget's being expected to help East Africa's largest economy maintain its recovery, just really balancing internal optimism with risks from the fragile global rebound. We're taking a closer look at expectations of that announcement now with the CEO of PKF East Africa, Mitra Sunirmal. Thanks so much, Mitra, for joining us this afternoon. Well, let's look at Kenya here, because it's a very fine balancing act that Finance Minister Uhuru Kenyatta has to play today, needing to enforce an expansionary budget to actually stimulate growth on the one hand, but also bearing in mind that he's working with limited revenues. So what are your broad expectations out of today's announcement?
Thank you. As you rightly say, that it was the budget that was announced this morning by the minister, a staggering figure of about $1 trillion shilling, which is equivalent to about $12.5 billion. And I think that's the highest ever in Kenyan history. But having said that, I think we feel that is unlikely to be a radical budget, and expectations are that the government will, as usual, continue to focus on the macroeconomic stability of the country. But it's also our hope that the clear measures will be defined to bring about an accelerated and sustainable growth of the economy. But what is important to note at this moment of time that Kenya has had a very slow economy for the last 2 years, and which is why the accelerated growth is very important. But I must say that despite the adversities like the post-election violence or global economic crisis or severe drought, I would say that Kenya did exceedingly well by recording a 2.6% growth in the GDP. At the same time, the economy being resilient. To attain the 4 to 5% growth is also doable in 2010.
Doable, reliant on economic stimulus packages, because we've seen various sectors actually vying for a slice of the pie here. You know, calls from the manufacturing space, the tourism industry as well, all in a bid to boost economic growth moving forward. We haven't had the full allocation of the budgets for all the sectors so far, but whatever we have seen this morning in the news, a sufficient amount of allocation has been made to the infrastructure and education, and as you know, that education always takes a lion's share of the budgetary allocations. But what we wanted to see is more allocation being done towards agriculture, because agriculture unfortunately had a negative growth last year of 2.6, and we hope that the more allocation will go to agriculture and particularly tourism, which didn't happen. So that was I think one allocation I think we were hoping to see, but it didn't happen. But we'll know more what reforms the Minister is going to announce this afternoon. Taking a look at the fact that we do have government needing to spend, so we're looking at an expansionary budget, but within very tight constraints here. Some suggest that we're looking at a budget deficit of 5.5% of GDP from the 6.6% we saw last year. What's your take on that level of deficit, and is it a sustainable level for Kenya right now?
To achieve 4 to 5%, as I said earlier, is still doable. But I think what the government must do is to link the allocation to the budgetary policy for the medium-term economic framework to make sure that happens. And if we have two major concerns sorted out, which are focused on social equity and accountability and transparency with zero tolerance to corruption, and together with the support to private sector, there's no reason that why we cannot achieve 4 to 5% of GDP in 2010. If
you look at that budget deficit, though, I mean, is it a safe level to be sitting at right now, looking at the fact that there has been comment that, you know, there's an over-reliance on domestic borrowing to actually fund that budget deficit?
Yeah, absolutely right. I think the budget deficit at the moment is projected at 223 billion. And the way it is at the moment expected to be sort of financed is about 103 million from the Treasury. But then the balance, we need to see how the minister juggles his figures and from what source it's going to be. Last time we had talked about the deficit being financed through sovereign bond or sale of the government-owned assets, which did not happen. So there is a possibility there could be increase in taxes in both indirect and direct, but it still remains to be seen.